You ever looked at your credit report and seen one account that's charged as a charge-off, and then further on down the report, you see the same account and it's labeled as a collection? Now, as a regular person, you may think that a charge-off means canceled. So the natural question is, if this account is canceled, why is it reporting also as a collection? Today, we're going to talk about the difference between a charge-off and a collection. Check it out. So let's go to the definition of a charge-off. A charge-off is just a severe negative mark on a credit report occurring when a creditor deems a debt, usually 4 to 6 months, delinquent, unlikely to be collected, and writes it off as a loss, right? This is just the bank making an accounting move. The bank has determined that they cannot collect this debt from you, and they are simply writing the debt off. Typically, what they do is that they sell it to a debt collector for pennies on the dollar. That is how a charge-off works. Now, a collection is not a charge-off. A collection is the process where third-party agencies or creditors pursue payment on delinquent personal or household debt. Like I said, a collection happens after a charge-off, and a collection agency is still coming after you for the money. It does not go away. Now the debt collection agency has your debt, and they are going to continue to attempt to collect the debt from you. Now here's where it feels shady to consumers. Upon charge-off of a debt, typically a bank will issue what's called a 1099-C, a cancellation of debt. So the question becomes, if you're reporting to the IRS that this is a loss, or even issuing a form 1099-C saying the debt was canceled, how are you also telling me that I still owe it in full? That's the contradiction that we're going to look at today. In many situations where a lender actually cancels the debt, they'll issue what's called a Form 1099-C. This is an IRS tax form that basically says, we're not collecting this anymore, and we're going to issue this as income to you, to the IRS. So from a consumer perspective, it feels like either it's alive and collectible, or it's canceled and you're hitting me with a 1099-C. But here's the kicker. It shouldn't be both at the same time. So when you see a charge-off and a collection at the same time, you have every right to ask, what is the true status of this debt? So now we're going to walk through the credit report audit. So first we want to find the original creditor trade line. Look for the charge-off status, right? Next, we want to find any collection trade line reporting the same account. Often it's a different company name that just says in collections or a collections account, right? So we want to write down the original creditor name, the charge-off date, the balance they say is still owed. Next, we want to find the collector name, the balance the collector is owed, and whether the original creditor still shows a balance or shows $0 written off. If the original creditor says a $0 balance charged off and a collector shows the full balance as collectible, now you have a very confusing, potentially misleading situation on your report. You have one debt, but two stories. So now we're going to draft our letters, and this will be our letter strategy. Okay, so we're going to write two different letters. We're going to write one letter to the original creditor, and we're going to write another letter to the debt collector. And the letter to the original creditor will have some type of language that poses the question, I see that you are reporting this debt as a charge-off. This same debt is being reported as a collection. So which one is it? Now we're going to write the same type of letter but in reverse order to the debt collector. And we will say something like this: I see that you are reporting a collection account while the original creditor reports the same account as charged off. And we're going to ask them both, please remove this account. You are not reporting this information correctly. So after we draft our letters, we're going to run the same mailing strategy that we run with all of our letters, right? Print out the letters, sign and or notarize them. Notarizing is important, caveat, because sometimes CRAs, banks, institutions will reply with a stall letter stating that they don't know who wrote the letter. So if you get your letter notarized, that will bypass those types of stall letters, and it holds in court if you have to go to court. So signing and notarizing is a very powerful strategy. And then last, we're going to want to package our letter and mail it certified mail with a green return receipt so that we have proof that the letter is delivered with a signature. We can track it and we know when it gets delivered and who signs for the letter. This is very important. If your credit report shows both a charge-off and a collection for the same account, you should not just accept that at face value. You deserve a clear answer on whether the debt is active, canceled, or has already been counted against you as income to the IRS. So text the word credit repair to 458-658-1323. Again, that's credit repair to 458-658-1323 to receive your free Elevate Credit Beginner's Guide so you can get those charge-offs and collections deleted from your credit report. To your success. Salud.